Widening Chinese investigations into suspected rules violations by China's largest brokerage weighs on November's stock gains, but has global markets felt the impact? I'm joined today by Michael van Dulken, Head of Research at Accendo Markets, to look at this and more. So Mike, there was a tumble in Chinese equities after a Chinese regulator said it's investigating major Chinese brokerages over suspected securities rules violations. With these investigations ongoing, how has this affected sentiment in the market?
Indices came off a bit, but it's nice to see that they didn't come off too much. I think in percentage terms, for China, 10% isn't too bad. When you look at the heights from which we came, towards within the summer, the sell-offs were particularly violent, and indeed had a knock-on to other markets, sentiment elsewhere, and even central banks taking it into account in their policy. So yes, it was quite a sell-off, but we have rebounded, and I think that it's still a developing equity market. So I think they were very happy while things were all bullish and everything was rising, but got a bit jittery when the sell-offs got a bit much. So we're seeing the authorities intervene quite a lot, and I think that intervention has maybe stepped up to the point where we've seen brokerages investigated for their use of margin trading. Maybe that's contributed to ramping up the markets a bit too much, and maybe using them in the wrong in the wrong ways. So I would imagine that kind of investigation will be ongoing for a good while longer. But it's good to see that it hasn't derailed the equity market recovery in China from late August. Indeed, even though we did fall off about 10%, we've retraced the best part of that already by early December.
Now, there didn't seem to be much reaction to the tumble outside of China, especially compared with some of the massive stock swings seen in August, like you said. But does that mean the crackdown on brokerages will not have any implications for stocks in Europe and the US?
It may have a little knock-on to sentiment, but the investigations relate to what's going on with Chinese brokerages in China. If it did spread to other multinational brokerages, then yes, potentially you might see more of a knock-on. But it's still, in some cases, a bit of a closed market, so I'd imagine it might remain domestic for the moment. In which case, any further jitters should remain within the Far East rather than encapsulating everyone else.
Now, of course, it is a busy few days with the policy meeting at the ECB today, an OPEC meeting and US job numbers tomorrow, with the prospect of tighter monetary policy as well from the Fed. With all these different factors, what do you think offers the biggest headwind to the markets?
I think it's the uncertainty. The uncertainty really is related to the expected divergence in monetary policy, with the Fed ready to hike rates while its peers are still in easing mode. What's interesting today, and literally just before we started talking, the ECB announcement was far less dovish than markets were anticipating. We had been looking for ECB to deliver a very dovish statement about growth and the outlook, to cut rates, to expand QE, to extend the QE, and maybe even chucking in some forward guidance just to keep us happy. But a mere cut to rates and a small extension to the QE program has clearly disappointed the markets, and it means that the policy isn't quite as diverged between the ECB and the Fed as might be the case come the month end if the Fed does indeed hike, because we're expecting so much more from the ECB. Now, it may be because the ECB didn't want to. Some are saying it's just tinkered on the periphery, but it may not have wanted to play with things too much at once, cutting rates, extending QE, expanding QE. Maybe it just wanted to deliver the rate cut first, and maybe it will come back to us early next year with more QE. So there's still potential for the policy divergence to come through, because expectations are still very, very high about the Fed hiking in December. Although I would say that there was as much hype going into the ECB meeting as there is hype going into the Fed's meeting mid-month. So there's always potential for the Fed to disappoint by not hiking rates, if that can indeed disappoint markets. You never know. We've seen extreme volatility in the markets after the announcement. The euro has strengthened strongly. The dollar's come off its highs. I'm sure that Janet Yellen and her colleagues will be having to take all of this into account as we speak.
Mike van Dulken from Accendo Markets with me there, looking at just some of the movement in the stock markets. That's all from me for now, but do remember to keep clicking back to Dukescopy TV for more insight and analysis across the markets. Bye for now.